Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as I go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive right in, take a look, see what's going on today. If you want to follow me, it's at @Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics, subjects, looking for investment opportunities and sharing those opportunities with everybody in the community. We do have a coupon code going on special. You get 50% off the first month only, which ends up being $25 for the first month, only for the first month. And the yearly membership, you get a $100 discount. It ends up being $500 for the year. And you can always swap from the monthly to yearly membership if you'd like to do that using the special coupon code. Sam Gatling says, here's what the leaders in energy look like compared to the S&P 500. Imperial oil divided by the S&P, and you can see we're right up against resistance trying to break out to the upside. He writes in there, when moon. When are we going to moon in imperial oil against the S&P 500? So I know there's a lot of bearish activity out there and on Twitter against oil. I see Francis Hunt talking about oil, basically pointing to that big down day that we recently had. Um, and I'm going to get into a little bit more oil here, uh, just to show you guys how I approach the markets. But this is one person's opinion, and I don't really care necessarily about other people's opinions. I mean, I do these updates because other people care about it. They want to know what other people's opinions are. Um, and yes, the ratios are a big deal. A lot of the major companies, ExxonMobil, Chevron, ConocoPhillips, they all have very good patterns, and I'll go through some of those. Monthly tradition continues. IEA's latest oil market balance forecast. Look what they're forecasting: gigantic surplus occurring in early to mid 26. Andy, why are you bullish oil? We've got this big surplus coming. Okay, let's keep going. We got Robert Friedland, decline in large scale copper discoveries, which is basically zero. Zero. So you can see the discoveries, it's bell shaped. It peaked in 1997 or 6 or something like that. And then we've been down, 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 and there's nothing. Finding gigantic deposits, I'm sure, are not too hard if they're really that big. Um, but here's my outlook on this. At some point, we're not going to be able to increase production a lot of things. A lot of people say, oh, technology this, technology that. I don't know if we're going to the moon or other planets to mine those planets. I find that pretty far-fetched in my life. Maybe it's possible. I don't know. I come from the aerospace industry, and everything in aerospace, whenever something goes in the air, we want it to be light. We don't want weight. But yet, mining is the exact opposite of that. You're trying to move weight. So I don't know. The energy requirements here would be astronomical. Mining something on a different planet and then somehow getting it back. Coming down, it says, what part of U.S. oil is bullish? I can't see how this price action is bullish. Fundamentals and price are two different things. Price tells us a different story for now. So he's saying he can't see how the price action is bullish. And obviously he posted some charts here showing that. Well, there's a lot of things that are bullish, and we can get into it, and I'll show you why I am bullish. Now, a lot of people are in this guy's camp, and that's where you have to buy, is when everyone can't see how it's bullish. Does that make sense? So when everybody can't tell, when everybody can't see, they can't do this. Oh, I can't. Why are people bullish on this? You need to be bullish when everyone else is bearish, and that is generally when there's good entry points. So let's get into it. Let's talk some of this. Oh, commodity to stock ratios at all-time lows, basically, and we're starting to turn up a little bit. The commodity index is turning up. That's going to be bullish for oil because oil moves with the commodity indexes. Gold has already moonshot. So gold's heading higher. Um, that generally precedes oil. So that's moving on up. We've got this chart here. This is oil, US oil. We've broken out of, again, we're at the circle portion. That is where we're located, the circle. You could even say that the circle is down here because we're underneath this point here. So the circle could be like here or something like that. Like this one never pulled back, but the circle is probably, I'll do this, probably more like here. And then you've got a line going across like this or something. All right. So that is one fractal, second fractal, third fractal. And it's literally in the same position. Now, in the short term, am I bullish? I don't know. Nobody can predict the short term. So if you can't predict the short term, why am I bullish? Well, crude oil is cheap against the S&P 500. Crude oil is cheap against um, the Nasdaq. It's cheap against gold. And we've got this fractal all located right in the prime location to potentially buy. And if it goes down $4 or $5, I would be a buyer, not a seller. Do you think we're closer to a bottom or do you think we're closer to a top? I would say we are very close to a bottom here. So everything is cheap for oil. US oil divided by the S&P 500. I know that looks pretty nasty there. Let's do this. There's the squeeze into the corner there. Your best opportunity of anyone's life is right where we're located. It is the best opportunity to buy oil of anyone's lifetime. That is my quote there. Of anyone's lifetime. And it's going to happen over this period right where we're in. Best time to buy. Oh, and if you're looking out in terms of a decade, yeah, I think that's probably going to be the case. So that's U.S. oil divided by the S&P 500, and I think that's going to rip. Here's Chevron. Chevron is sitting on top of its pattern here. So the last time it did this, let's go logarithmic here, blow it up a little bit. The circle that I've got there, that's the last time we did this. We broke out and we did a consolidation, and that's where we're located. The circle is the circle, roughly speaking. So we're right there. We're literally right before a big major breakout. And that's Chevron. You see the three hump consolidation, three hump consolidation, breakout, breakout, if I were to put the same thing there. And then you get a flag pattern, which is that. That's what I'm trying to show. And this little move higher, this fractal there of the beginning of the move, has already showed up. So the bottom is already in. It occurred in April and May of 2025. ExxonMobil, same location, breakout. And it's starting to break higher right now. Let's go to that's good. There it is, breaking out to the upside. That's breaking to the upside. So although crude oil itself is low, people are positioning because they know what's coming. They can see past the quote glut, so to speak. Your bottom was April 2025. Gold's already ripping higher. ConocoPhillips. That circle is where the circle is. Consolidation, consolidation, commodities cheap to equities, commodities cheap to equities, breakout, breakout. It even has the same little rollover deal going on. Same location. That's the ideal entry point that you should be loading up. We'll go into some other companies here. So I can prove my point. If you are interested in buying, you need to buy when things are low. Your entry point and bottom was here. This is already bottomed and heading higher. So the guys that are talking about, oh, oil's going to go down, then why the heck is everybody buying oil equities? On the website, this was our entry. Bam. Bought it here too. Bam. Making money. That's how you play it. You want to be a pro? You can't listen to other people. You can't listen to Twitter. Oh, well, oil's going down. Well, I'm sorry. This already bottomed in April and May, right there, of 2025. So when I make these references, when somebody says, Andy, how come you're so bullish on oil? Because every chart's already bottomed. It's already bottomed. Does that make sense to you guys? Here's another company. Does that look bearish? You're at support of a double bottom, a breakout, and a gigantic retest. And I would be buying here. These are the opportunities I'm seeing on the website that I'm sharing. There's your breakout. This one, falling wedge into a double bottom, which is the bottom here. November of 24, April and May of 25. And it's already heading higher. The guys that are saying oil's going to go down, they're already too late. I'm 5 chess moves ahead of them. 5 chess moves. And now I'm struggling to tell other people to say, yeah, that still looks good because we've already gone up over 100% off the bottom. Let's go some more. What is this one? Shoulder, head, shoulder, bottoming pattern, breakout. Already too late to the game. So these guys that are talking about what part of US oil is bullish, I don't know. The equities have already bottomed. They've already bottomed. And everyone who's asking this question is behind the 8 ball. They're already behind. So I looked at the majors, which are sitting on top of their patterns breaking out. We looked at oil on the long term. And basically, this is what I would consider to be one of the best buying opportunities of almost anyone's life from a ratio perspective and where this is located. One of the best. I'm not saying the best. The best is this false breakdown. And here, back in 98 at the bottom of the commodity bull market, bottom of the commodity bull market was 2020. That's how I'm calling the super cycle moves. But nobody understands that there's a rhythm, a pattern. The pattern that is playing out takes time. It doesn't go straight up. So my call of multi-$100 oil is coming. That's the pattern there. This one is angled downward, which could be this little thing. And we're probably going to the top of this at like $600, $700, $800 a barrel oil, maybe. Who knows? Maybe we have a washout little move lower before we go up. It's a washout slingshot move. Potentially. I don't know for a fact. Why are the equities already moving higher? You can't put narratives. This fundamental and price are two different things. Price tell us a different story. The equities have already bottomed. And then usually when the market gets stronger, Saudi Arabia releases oil back into the market, which is exactly what they're doing. That's not bearish, that's bullish. So I don't know. I don't know if I look at the markets completely different than everyone else. If someone said, Andy, when's the best time to buy oil? So this is gold versus oil. It's when oil is cheap. When it is cheap, when it's here, 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 and here, that's when you buy it at those bottoms. And then you don't want to be interested in it when everyone else is telling you, well, oil looks really good. Well, that's not when you want it. So this is the cheapest oil's ever been in relationship to gold, and I think this isn't going to stay this way forever. If it stays this way for 6 months or a year, consider yourself lucky because then you can buy it in multiple accounts multiple times. That's the way I'm going to view it, and I'd be a huge buyer. Gold stocks broke out of a major consolidation. Copper miners followed with almost the same pattern. Energy equities are next, in my view. First gold, then copper. Now watch energy. So this is the gold miners. You can see the pattern here. That's a fractal pattern that repeats over and over, and then the breakout. Fractal pattern, and then the breakout. And we've got the same fractal pattern, and it's like right here was May, April of 2025. There, and there. And you're going to say, oh, it's not a good time to buy? Really? You buy them. And I purchased a bunch, April, May, June, all through there. Picking bottoms like hell. And you know how you make money? You buy it when no one else believes in oil or anything. It's in the disbelief phase. People don't believe in it. They look at it like, I can't see how the price can go higher here. And maybe that's the case. Maybe it doesn't go higher for the next few weeks or months. But that's not how you make money. You make money when you buy it when it's cheap. That's how you make money. And then you sit in it and you wait for that to play out. And at the bottom, everyone doesn't believe in it. Everyone, by the time people gain confidence in the move higher, you've lost the bottom. You have to buy when everyone can't see it, is indecisive. The data is murky. It looks very bad. The sentiment is horrible. That's when you got to start pulling triggers. And the better you are means that you can pull triggers not just at great times, but you can do it in size. That's when you're really good. So gold looks obvious. Copper looks obvious. This, not so much. That's when you pull the trigger. It says buy emerging markets and commodities, sell America and Europe. The whole commodity cycle's coming, guys. It's all coming into favor. It says it's going to be a long next 10 years for investors in U.S. stocks, according to Peter Oppenheimer. The Goldman Sachs strategist who correctly predicted Wall Street's underperformance this year sees U.S. equities continuing to lag other markets for the next decade. That's the commodity bull market. Oppenheimer and his team expect the S&P 500 to achieve annual returns of 6.5% in the coming 10 years, the weakest among all regions. Emerging markets are projected to be the strongest at 11% a year. That's exactly what I'm saying. Now, I don't need other people to say it. I believe it because I see it in the charts. I see it in the charts. Now, oil going up also goes up when emerging markets go up because it's a weakening dollar. Maybe people don't understand the market dynamics in play. Maybe they don't understand that emerging markets being bullish is bullish oil. Oil went up massively here. And that deals with a weakening dollar. And I think this is gonna break out and run massively. You can see the lows coming up. Whenever your lows come up like this and they squeeze into resistance, it's gonna pop out of that other side. That's emerging markets, EEM. All coming. Warren Buffett explained why impatience is the most expensive habit in the world. So the power of patience and compounding. When I buy a business, I'm not thinking about next year. I'm thinking about the next generation. See, what he's doing is everyone is thinking about the next year. He is exploiting short-term thinking and replacing it with long-term thought so he can get the good buy points. If everyone is looking at the next quarter and the next year, oh, they're not going to do very well. Well, that's when you need to buy. But you need to be patient enough to hold through it. It says the stock market is a device for transferring money from the impatient to the patient. Most people can't stand waiting because they mistake motion for progress. They think that doing something is progress. That's not what it is in investing. You got to buy cheap and you just got to sit. Sometimes you don't time the bottom perfectly, you sit longer. And people will say, well, that's an opportunity missed. Not if you're beating everyone else. If your strategy is beating everyone else, that means that you don't have an opportunity loss. It means that your thinking is wrong. That you think an opportunity loss is waiting, but waiting is the game. It it means you don't know how to invest. You don't know what strategy is the best strategy. The strategy that is best is the one that produces the best results. And that doesn't mean that the strategy that produces the best results is the best for every person. Because there might be character flaws in that person that can't be successful in the best strategy. It says you don't need to be brilliant to build wealth. You just need to avoid being stupid. Stay rational when others lose their minds. When others lose their minds, you buy because they're fearful. Compounding only works if you give it time. Every decision should make sense, even if the market shuts down for 10 years. Games are won not by those who swing the hardest, but by those who never stop holding the bat. They keep swinging and getting it and staying in the game. The problem that people have is they're too impatient. They use strategies that are losing strategies. What I'm trying to do is buy when things are cheap and sit and wait, and then they become more expensive over time. Most of the move comes from valuation changes in the company. So you buy it when it's really cheap, and then you sell it when it's really expensive. And that's the valuation change. That's the 5-10 baggers. So if you buy something that at a 0.25 price to book and you sell it at a 25 price to book, well, you just 100x that stock. The difficult part is everybody wants to chase price and then they buy the overvalued asset. So they buy it when it's expensive, hoping that it gets more expensive. And you've got no margin of safety, no downside protection, and all that stuff. And you're probably at the top of a market cycle. Freight futures AM update. You got some big moves. Dry bulk, Capesize up 5%, Panamax up 1%, and tankers are up big. VLCC up 8%, Suezmax up 5%. We've got SILJ increasingly looking as if the backtest is done here on SILJ, and that's a cup and handle pattern that he is showing there. But guys, just let it play out. I mean, we're at a huge interest rates going up is going to send money into gold and silver. Just be patient. The problem is everybody is trying to read the short term, and nobody knows what's going to happen in the short term. They're all trying to make these guesses. And when you get a pattern this size, you don't make guesses. You just play the big long-term pattern. If the pattern plays out in 10 years, 20 years, or 30 years, just hold on to it. Why are you trying to play the short term? No one makes money in the short term, guys. No one does. Everyone makes it in the long term. Oh, but I'm going to speed it up. I'm going to figure out a way to do it. Well, then go broke. I don't know. I mean, people don't make money in the short term. Weeks and months, very few people. Now, they might make money on one thing, but it's off of luck. They can't repeatedly do it. That's why none of these billionaires are short-term traders. None of them. Today's silver future price has made another new all-time high. Spot price has not so far. It said lately that one needed to understand that this latest up move was very different from previous up moves. The chart was now finally ready. History in the making. My long-term target is still $370 an ounce. But yeah, let's get scared out at $50. Guys, I don't know. Like I read all this on Twitter and I'm just I shake my head. It's like, okay, now I understand what the herd is like. It's like they're just playing a completely different game. They get so afraid when the price goes down. They get so happy when the price goes up. And all they care about are these short term little market movements. If the market goes up, the person is right. If the market goes down, the person is wrong. And they're using these very short term market movements. You need to understand that the big picture moves is where all the money is made. And then you have to be able to sit. You need to buy when others question, what looks good here in oil. That's when you buy. When things look obvious, like, oh, silver's totally breaking out, and all of retail jumps in, that's when you get cautious. You want to get in there when people are doubting it. Silver trades at up to 100x leverage in the paper market. For every 1 real ounce, there can be 100 paper ounces stacked on top. A farce propped up by the banks for years, now cracking as silver enters real price discovery. Triple digit silver isn't crazy. Well, the paper market is bigger than the physical market in every single commodity. It's like that in oil as well. And yes, the commodity markets are going to start to break at some point if there isn't enough physical to back it. Says the massive bull run in commodities is yet to start. 2026 will be huge. That's the run up here. And this is also a reason why I'm bullish on oil, because oil is a large mix of this commodity index. So it's already headed higher. This is gold to copper ratio 2 years in advance. And this is starting to turn higher right here. 2026 could be a stellar year. 26, 27, 28. You got to get in when it's cheap, when people are doubting it, when it looks undecided. Silver's about to enter a true price discovery phase. In my view, here's a reminder that this is all happening while the gold to silver ratio remains near historically high levels. Game on. This is all going to rip back down. You buy when things are cheap, and then you sit and wait. You just sit and wait. Don't leverage up. Get it where you are comfortable holding with volatility, and then you sit and you wait. When this all unwinds, it'll look so obvious looking backwards, and it will be so risky while you go through it. This was a good quote. I think it was from Morgan Housel. He said, every downturn when looking forward is a risk, and every downturn looking backwards was an opportunity to buy. How do you fix your brain to see that every pullback in the future is an opportunity, and looking backwards, it is also an opportunity? And I already went over that last time. So I'm going to end it there. That's what I've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Specialist coupon code. We have a Sunday Q&A session coming up 5 p.m. Mountain Time this weekend if you're interested in joining. And that's all I've got for today, guys. So we'll catch you next time. See ya.